Welcome everybody, I'm Robert Rowntree, the Global Strategist at Eastspring Investments. Many financial markets this year have rallied strongly and equities have led the charge. China's been up 25% once you include dividends. Asia, ex-Japan, is up 20%, and even the expensive US Treasury benchmarks have managed to eke out a 2% return. The question is, are the drivers behind these rallies continuing into the second half? We think they are. One major driver is the wide yield gap between the expensive sovereign bonds and equities. Yields on sovereign bonds are at record lows, and yields on equities are much higher, and yields on Asian equities are even higher still. So at the end of the day, if an investor wants both income and yield, they're being forced up the risk curve, away from the safe sovereigns into the higher yielding bonds and ultimately into equities. Now, you may ask, will bonds sell off? It's possible, but so far they have maintained their levels, while at the same time we've seen equities rally. And this is all due down to one factor: liquidity. So let's look at the liquidity driver. Despite the fact that the US Federal Reserve has been shrinking its balance sheet, the world is awash with cash. And this is because the central banks are printing money, basically. And while the Fed is actually withdrawing cash from the system, it's not doing it aggressively. And the result is there's a huge amount of liquidity over and above that required to drive day-to-day economic activity. And the result is a money lake. And this money can go into any kind of asset class. It can go into bonds, it can go into equities, or it could just stay in banks. There might be some choppy seas further ahead as the European Central Bank and the Bank of England cut their quantitative easing programs, but it doesn't look as though this will be sufficient to drain liquidity from the system. So the basic message is there's still plenty of liquidity. Last but not least is the earnings. The world is moving into a cyclical economic upswing, and as a result, the earnings forecasts are rising. Now, the profit bounce back in the emerging markets in Asia are particularly strong, and this is because Asian and emerging markets profits fell in recent years because of strong dollar fears at the time and falling commodity prices. But that was yesterday, and today those profits forecasts are rebounding. With economic growth slated to increase again into 2018, the profits outlook is looking pretty good. So in a nutshell, the second half drivers, or the drivers that would drive behind the rallies in the first half, look as though they're going to extend into the second half. We may see investors falling to the temptation to take some profits, and one should be braced for that. But as we've just tried to highlight, the drivers pushing the markets forward have still got plenty of momentum yet. And thank you for joining us.